Imogen, thank you so much for being here in our
Pleasure.
studio, SuperReturn Europe. You've just fresh off the stage where you were specifically looking at the opportunities in the mid-market, lower mid-market, and obviously we're Europe focused. Tell me what the picture is there and what you're seeing at the moment.
I think that it's a really interesting area of the market to be investing in. There's opportunities to create more value when you're investing in those companies and adding value as you own them. There's more opportunities to buy them cheaper. So on average, they're 1.8 times cheaper than in the larger end of the space. There's lower leverage and more exit opportunities. But I do think that there's a potential for that space to start to be a little bit crowded. So I was speaking to a GP on Monday who said that they're finding that it's a much more competitive space in the mid-market. So you really need to know what you're doing in that space and have those networks to be able to source investment opportunities to generate those really interesting investment opportunities.
What do those networks look like and what do those teams look like, as you say, if you do have to be more selective and it is a more competitive environment?
I think you really need to turn over every stone. Maybe 20 years in the industry, these opportunities would fall into your lap and it was much more organic. But I think what we're seeing is managers making much more conscious efforts with their origination. So they're using AI tools for CRM systems to really scour the market. They are sending handwritten notes to CEOs of companies in Germany to try and generate opportunities, or they're developing really deep networks with all of the intermediaries in the industry to try and generate that deal flow. So I think they're really having to work hard to generate those opportunities.
And that is different to the environment, as you referred there, for 20 years, it may have fallen in your lap. That is a different environment. So, with that, what are the opportunities that come with that as well? Because if you are an expert, you do have that history of expertise, and presumably this is a time where that really pays off.
Yeah, and I think that's something that we actually talked about on the panel earlier, which is that GPs have to sell themselves to companies too. Companies have to want to work with an investor and they've got a choice of who is going to invest into their company. So they need to offer something. So if that's expertise and experience on building a company or growing that asset, or if it's introducing them to people at the board level that are going to be helpful from a strategic perspective, or if it's the relationships that they have, they just like those people and they want to work with them. I do think that GPs need to have those selling points to be able to differentiate themselves and for a company to choose to work with them.
And do you think that's different in Europe to the US as well?
Well, I think Europe is a much more fragmented market. So you've got more opportunities for sector specialism, for country specialism, whereas the US sector specialism has been around for a while, but you obviously have less of a geographic element to investing. So in Europe, there are opportunities with country specialists to develop networks and experience that is maybe differentiated from pan-European or other types of investors.
And you talked there about sort of geographical challenges in Europe. It's a more complex, fragmented picture, but in terms of sector ideas as well, are there specific sectors you think that are looking sort of more popular and more attractive to investors at the moment in Europe?
Well, if you look at the long-term trends, there's obviously technology is a really interesting area at the moment. So AI is being transformational and there's a lot of growth in that area. There's also healthcare, which is fundamentally an interesting sector because of the long-term trends of healthcare. And also that crossover between technology and healthcare is a really interesting area of development. So we see a lot of sector specialists in those areas. The other one is evolving consumer preferences. So things like how we're using our mobile phones to buy things, or we'll focus on sustainability as a theme. So there are some kind of high level sector trends that are interesting. In Europe specifically, defense has obviously become more interesting to people, more Europe for Europe spending. I think more internalization of some of that capital has been a key trend that we've seen in the European space.
And infrastructure seems to be very high up the agenda this week here as well, but as an opportunity and perhaps even viewed as a slightly safe haven in what's been a volatile environment.
Yeah, and I think there's an ever-growing need for infrastructure spend. So there's a demonstrable opportunity set that needs to be invested in order to improve the infrastructure, especially in Europe. We've got a lot to catch up on, and also digital infrastructure with the increased usage of AI and all of the energy and data space that goes with that is a really interesting area of the market.
You mentioned AI there. It did come up in the panel as one of the questions as well, around those lower mid-market companies that perhaps haven't been at the forefront of the AI revolution and now catching up. There is actually an opportunity there to add value and build businesses that haven't had that expertise within their own teams too.
Yeah, exactly. And to come back to the point I made earlier about what a GP is offering to a company, I think that's a really useful tool for them to be able to demonstrate, look, we can really help you. We've got experts who've gone through this journey with other similar companies and can bring that experience to add value to the company and the investment that we're making in you. I think that's a really valuable synergy that they can provide those companies.
And in terms of just moving on to exits, we've talked a lot there about deal sourcing, but what about the exit environment at the moment? What are you seeing and what's the picture as we go into 2026?
We came into the year really hopeful on exits and expecting a big uptick, and then we had a bit of volatility in the first half of the year and uncertainty that really put that exit market on hold. Since the summer, though, it does feel like that started to open up. We're seeing more exits being announced by GPs. I wouldn't be surprised when the numbers come out if we do see a big pickup in the second half of the year from an exit perspective, and that's obviously hugely welcomed from an investor perspective. We really are looking for that capital to come back so that it can then be reinvested into the system.
And that could be a big trigger to fundraising too.
Exactly. It gives you more capital that's come back to be able to reinvest, because up until now, I think there have been constraints on liquidity that do hinder further investment into the sector.
And when you were talking about exits there, you said about obviously the very clean exits, if you like, but there's also a lot of talk at the moment around sort of continuation vehicles, secondary, those markets. And you did express that perhaps we needed to just be a little aware of what that picture, how that picture could be slightly murky. Explain that in your own words to me. What did you mean when you said that on the panel?
There's different reasons for doing CVs, and I think you really need to understand the motivations of a GP for doing them. It can be a really interesting exit opportunity if a manager's held a company for 7 years. They realize that those investors want to see some capital back, but they don't want to sell their crown jewel because frankly they've got attached to it, and they realize that there's a further value creation journey down the line. So they want to provide that exit, but they don't want to ultimately sell that company, and the CV is a perfect opportunity to do that. Where it gets more muddied is where the incentives may be misaligned between investors and the manager. So are they doing it to create another revenue stream from a management fee perspective, or are they doing that because of carry, that they aren't going to generate carry on a previous fund and it turns it into a carry generating opportunity through that CV? So you really need to understand why a manager's doing it to make sense as an investor about whether it's something that we want to do.
Private equity and private capital has always been as successful as it has because of that long-term view as well. Not a rush to exit, to be patient. Do you see there's a sort of impatience in that picture at the moment, and does the industry need to be careful that they just need to hold tight through this very volatile period?
Yeah, that's an interesting question. You're right, we are a long-term industry and we do look at it through a long-term lens. I think what people have struggled with is the average distributions decreasing significantly, which means that there's not that capital to reinvest. So whilst you do have that long-term lens of investing, you do need to see capital coming back in the midterm in order to reinvest that capital. And hopefully we're going to be returning to an environment where that is a bit more normalized, and then people can relax a bit and not be so pressured on the exit
And there are
environment.
mid-market companies who desperately need that investment and that fundraising to happen. So
exactly.
let's hope that changes. So just finally, looking forward now for the next 12 to 18 months, what are you most excited about, and what are your hopes for 2026?
I think it's a really interesting investment environment. If you're investing with those top quality managers who you really believe in, and they've got the teams to source investment opportunities and generate value and ultimately exit those companies, we will continue to see really interesting returns. I think that there's huge opportunity and potential for private equity to continue to outperform public markets like it has done over the long period. I think it's a really interesting and enjoyable place to work. It's a really interesting industry with a lot of intelligent and motivated and active participants in it.
And the quality of the teams and the relationships you have is going to be more important than ever.
Yeah, exactly. Yeah.
Always great to have you in our studio. Thanks so much, Imogen.
Pleasure.
Great
Thank
to see
you.
you. Thank you.